Our conditions remaining bullish in this bull market. Bull market rank sitting at 26.50, still well elevated and kind of flattening out right here over this really since the summer. This is July on. We're seeing the top end of that momentum range. That's this 26.5 number, and certainly in a strong bull market, but at the upper end of this 2.5 year bull market. Buy sell ratio moving to 1.59, was at 2.03 yesterday, so seeing a little bit of width happening right here, some distance taking place, but we also have green above red, meaning we currently have bulls in control. We've got a little bit of a retracement happening here on S&P 500 over the last couple of days. Not a lot. You see a little bit of a bottoming tail bar right there, a little bit stronger sell-off here in the Dow. You can see a little more solid bar, each up in the momentum zone or in the extreme end of that momentum zone. S&P 500, it was up in this range. You can see, we talk about this when we see these trending moves going from bullish trend to extreme to back into bullish trend to extreme, and typically that'll happen while this maintains this green look. If it dips back down into these, then we get into this range. So a good healthy uptrend is moving just like this into extreme, pulling back into a sustainable trend, and S&P 500 is still inside of that range, although having a pretty nice run here is probably some profit taking at these levels as well. 586 for support on S&P 500. We're also seeing bonds continue to slide right here. Let's look at the short-term bond, SHY, continuing to dip back down below the 618 corrective zone on SHY, and also TLT continuing to slide another 1.5% as of yesterday. So some interesting bond activity continuing, and let's jump over to sectors. We saw a little bit of weakening in sectors yesterday when we were looking. We only had one in this sell zone and several in the hold zone. We've had a couple move into that, back down into that sell zone: basic material, healthcare, real estate, and so we're seeing a little bit of a sell-off in sectors with that retracement yesterday in the major markets. If we take a look at the let me just get rid of this right here. Commodities, we're seeing continued weakness in silver, gold, and oil. Silver, small move higher yesterday, support right at that 50% retracement of this most recent rally, and we're also seeing gold in that deeper retracement down into that corrective zone here, 382, 239, that 240 range. Here we'll watch to see if we do get any support at this area. When we break through these momentum areas, that typically means we're in for a little bit deeper, longer correction or retracement, particularly if we get a trend zone shift back into downtrend. And so gold's got some work to do now to find some support at these levels. Gold pulling back as dollars improving, Bitcoin's taking off. A lot of this move lower in anticipation of a stronger U.S. economy, stronger U.S. dollar, and Trump support of Bitcoin, seeing that have some effect on gold. Let's jump over and look at some muscle stocks. Not a whole lot in the list today. MESO is one also to keep an eye on. Good confirmation. Not a solid bar. I saw some selling yesterday, but that's typically what happens during a market sell-off as well. Again, markets are just individual stocks, so a rally and a pullback, and you've got resistance happening right here as well. But you've got increasing volume back into momentum. MESO, interesting play for today. If we jump down a little bit deeper here and take a look at AXSM, some of these medical biotechs are the ones that are really moving right now. Potential opportunity here, breakout trade, 9% increasing volume, and decent confirmation bar, and not a huge move as well. If you get those big gappers or movers that are moving 15, 20, 25, 30%, are a little bit tougher to get into and manage risk as well. So with a 9% move, you can enter in and manage stop losses low here or low down at that 87 for risk management. That'll do it for today's update. Everyone have a fantastic day today.